Ladies and gentlemen, welcome back to the channel. I'm going to give you a December update on where I've been at as I've been selling options for income in my real account. Now, I've been using the Derive platform. By the way, I'm going to continue using Derive. However, I have made some changes to my strategy. I'm going to be talking about that a little bit later in the video. I want to do a couple of things. I want to, first of all, just recap why I'm currently selling options. Why am I trading options? Why am I selling options? Particularly in the cryptocurrency space. Like if this is a crypto channel, why in the world are you selling options? Well, first of all, I am using a cryptocurrency protocol or a decentralized finance protocol to be able to sell options. Probably the best protocol, to my knowledge anyway, where you can actually sell individual options based on strike prices and underlying cryptocurrency, and being able to do it on chain. Now, so that's first and foremost why I'm sort of selling options, but why the actual strategy of selling options. Then I'll get into how much we've earned this month, and then I'll talk about some adjustments I'm going to make going into the next 6 months or so of the year, so we can kind of round out our first year of using this strategy and kind of share where we're at and what our goals are. The primary reason that I'm using this strategy for now, and we'll go ahead and hop over here and just look at our current positions. So we currently have a collateral value of $23,492. That is how much we will have once all of these positions expire. This account value will meet the collateral value as these positions expire, because we exclusively sell options, which, by the way, is one of the most successful, consistently profitable strategies when done appropriately, outside of selling covered calls. But selling options can be more lucrative in my personal opinion. I prefer to sell options. And on Derive, you're selling cash settled European options. All you need to know is you don't take delivery if you lose money. You just lose money. You don't take delivery of the actual option itself or anything like that. Okay. So therefore you can't really sell covered calls on Derive either. You're essentially selling cash secured positions. Okay. All right. So most of these positions are doing great. There's two sort of that we're kind of watching right now. But let's talk about why am I using a US dollar strategy instead of, Wealth, why aren't you buying Bitcoin? Why aren't you buying Ethereum? Well, I actually am, but I'm just doing small amounts right now. So we're primarily right now in a bull market. So in a bull market, the reason you're in a bull market is because a lot of people are buying. And most investors lose money because they want to buy when everybody else is buying. And so they accidentally end up buying the top. And then when everybody else starts selling, they want to start selling. My overall strategy has always been to be a little bit contrarian. So I am buying a small amount of crypto right now because I'm actually building out another passive income stream in crypto. The challenge with that is, like, we're going to have lower lows at some point, most likely. This isn't going to be like the bottom at 97,000. And many of us are still waiting for this market to go a little bit higher, but I don't have a crystal ball. So my investment strategy is always focused on not having to worry about market timing. How can I be right even if I'm wrong? And so the strategy is basically manage the passive income. So over here, my income stream is it's semi-passive income, and I'm earning hundreds of dollars. Hopefully soon it will be thousands of dollars every single month in US dollars. So just imagine right now, if the market was going down, if Bitcoin was all of a sudden, we were seeing $80,000, $70,000, $60,000 Bitcoin is dropping. A funny thing happens. Most investors are like, man, I wish I could buy Bitcoin at $50,000. But I promise you, if next week or next month Bitcoin was suddenly at $50,000, nobody's trying to buy it, because the average investor psychologically fears that the price is going to keep going down. The same reason they buy the tops. When the market's going up, they think it's going to keep going up. So right here, Peter Brandt predicts a devastating crypto crash. The more the market goes up, people are going to be claiming the market's going down. And crypto and influencers and content creators on YouTube and Twitter or X, whatever, everybody's always trying to give predictions. Even on this channel, I give predictions from time to time based on what I think can happen. But when it comes to actually making investments, I understand that I don't have a crystal ball and nobody actually does. So instead of trying to predict the market, I manage my passive income streams. That means that my passive income streams that I'm earning in crypto, I am taking those earnings and I'm cashing not the underlying, not the Bitcoin, the Ethereum, the XRP, whatever, the Solana, whatever I'm holding. I'm not selling that. but I'm selling some of the income that is generating. My core position, I'm not selling. And if you're like, how in the world are you making passive income with crypto? Through LPing, and I'll talk about that in another video, is one way. But what I'm doing is I'm taking some of that profit and I'm using it to build out my US dollar position, because theoretically we're in a bull market right now. We're near all-time highs. So we're essentially in a bull market. When the market starts pulling back 20, 30, 40%, then and I already know there's a bunch of people out there like, oh, Bitcoin's never going to go down 20% again. I promise you it absolutely will. That means I would stake everything I own. It absolutely will. It will go down 30%. We will see a 50% crash or more. I truly believe that. That's my personal opinion. But neither here nor there. I don't have to predict when it's going to happen or how it's going to happen or how deep the crash is going to be. All I need to do is when we're in a bear market in crypto, I will take some of these profits and I will concentrate them more into buying more crypto. Again, I'm only managing the income stream. I'm not selling the underlying bag, if you will, of US dollars. I'm not having to cash out dollars to buy crypto, and I'm playing that timing market like that. I'll just take whatever I make for the month and I'll take part of that. So the idea is that I'm going to be consistently growing a passive income in US dollars, and I'll be building this position far faster. We're in a crypto bull market, and I'll be building my crypto positions far faster when we're in a crypto bear market. Okay, if that's too much for you, just subscribe to the channel, and I'll be talking about that more in the future. Let's take a look at where we're at, and I'm going to talk about some adjustments I've made based on what's happened this past month. So right now, this is where we started at. Well, we actually started here, I guess, at $20,822. I've made 2 deposits in the month of December. For the month of December, I actually finished up down $1,192. That was down on my collateral value. And the reason is because we had 2 positions that we ended up having to close. We had already rolled or adjusted the positions, and I can make this, instead of rolling that position out for 3 months, I can make this back most likely. If you just look at the previous earnings, I can make this back most likely faster. So there's 2 things. I can make this back probably over the next 2 months or sooner. And I made adjustments to my strategy where I'm going to make some more conservative trades. Originally, I was trying to get 4 to 6% per month. Well, that's landed me in 2 negative months. And that hurts overall profitability. I would rather have a lot more 2.5% months and less 5% months if I don't end up with these red months. So I've made 2 primary adjustments to help improve overall performance. The first adjustment that I made is I've gotten more conservative opening trades. I now shoot for a 7 delta or below. That's 1. And I want to make certain that we have an IV, or what's called implied volatility. All you need to know is when implied volatility is high, anytime price movement is high, like on a percentage basis. When you have those 5, 6, 7, 8% up and down days, volatility is higher. I want to make certain that we are over 70%, an IV of over 70%, and a delta of 7 or less. This puts me making a lot more conservative trades. Still trying to get 1% per week if I can, but the higher priority making certain that we have an IV rank of over 70, 75 is better, but over 70, and a delta of 7 or less. And that doesn't matter if I go out to the 17th. Like in this case, I could open up this one here if I wanted. If I go out here, 1, 2, 3% is what I would like to get. But this is a 9 delta, so I wouldn't do it. I wouldn't take this one. Let's see here. And again, I'm selling puts here. This is 7 delta, and I'm out 1, well, technically a half, but we'll say 1.5, 2.5, 3.5% is what I would want to earn here. We are at 78% IV. If I was going to sell this, I need to put on my VPN. But if I was going to sell this, then I would, let me see what that would do. Yeah, that would get me out. Yeah, that would make me about 4%. So that would totally be a doable trade if I wanted to go out that far. I try not to go out that far. I try to stay inside of 1 to 2 weeks. Reason being, it gives me a lot more options. If a position gets in trouble, I can roll it out to the 24th, or in this case, the 31st. The other thing that I'm looking to do is just to be more conservative. I'll show you right here. Positions. if you take a look, I have a lot more positions where it's like I have 4 positions that are open to expiring this Friday, then 1, 2, 3, 4 positions on the Friday after, and then 1 position on the Friday after that, and then 1, 2, 3, 4. What I'm trying to do is keep my expiration dates spread evenly. Reason being, let's just say this position gets in trouble or this position gets in trouble. Well, I would have to close those both out for a small loss, but I'm going to get enough capital freed up this coming Friday, plus the capital that I have here. I'm going to have somewhere around $4,000 to $5,000. That is going to be no problem if I end up having to roll these positions out to make back any losses that I might incur, temporary losses that I might incur right here and right here. So it prevents me, as long as I can roll a position and make a profit, then I'm going to be profitable for the month on my collateral value. And that's the goal. We're tracking our collateral value right here. And so at the beginning of the month, I was at $23,358. I haven't added anything else to this position yet. And you can see that I'm currently at $23,484. So I'm already up so far on this collateral value. And come Friday, we'll be able to sell some more options and we'll continue to go up. So I'm hoping to be able to have somewhere between $600 or $700 in profit. We'll have to see where we land, but that's what I would like to have for the month. I mean, if we have more than that, that's great. If our collateral value goes up $800 or more, that would be awesome. But we're at least going to be looking for that $600 to $700 per month, and we're going to keep going. Now, again, this is all part of our sort of a perpetual income strategy. This is just a US dollar side of that strategy. If you want to know more, be sure to subscribe to the channel. If you have any questions about what I'm doing, selling options, a specific question, then put it down in the comments. I may make a dedicated video just to answer your question when it comes to selling options. If you want to get started with options, I'll put a link in the description. I think selling options is something that every crypto investor should understand, because I think there's going to be a fair amount of opportunity. We're going to always be able to sell options probably on crypto, even if we're not using Derive, if we're using some other platform, we're going to be able to sell options. However, I believe that there's going to be a window when options selling is going to be far more profitable than traditional options on the traditional markets, just simply because of the massive amount of volatility. So I believe that's going to exist over the next 2 to 3 years. And I believe selling options is a great strategy. And it's very easy. You don't need to be intimidated by it. It's very easy to get started. Just get started and start small, and just kind of learn how the option pricing works by coming in here and just, selling an option. You pick something out a week or two out with a 7 delta, come in with, I don't know, $2,000, $3,000, $4,000 and come over here and just make a trade. And when you make a trade, just make it for like 0.1. You can sell 0.1 of an option. I normally sell 1, 2, 3 options, but you can sell 0.1 and just watch as the market moves. Give yourself a couple of months, maybe 3, 4 months even, just to watch every week sell an option and just kind of watch how it moves, how it expires, and how you make money. If it gets in a little bit of trouble, if it goes all the way up to a 30 delta, then just roll it out in the future. All that means is let's just say that you're sitting here on this 3,300 expiration for January 10th. And it's sitting at 28 delta. You're like, you know what? That's close to 30. I want to close it out. You're going to close it out. When you close it out, you're probably going to take a loss. Well, you will take a loss. But then what you're going to do is, let's just say that you hypothetically lose $31 and you have, I don't know, $2,000 in buying power. What you're going to do is you'll come over here. You'll say, okay, I need to make back that $31 and I've got $2,000 in buying power. So you're going to come over here and you're going to say, okay, I can sell, let's see, 4 of these. That's not going to get me. I can sell 4 of these, but that's not going to get me $30. Let me go out one more week. Okay, that's a 9 delta. Might not want to do that. Let me go out one more week. 6 delta. I mean, when I roll options, sometimes I do go higher. But let's just say you came here, you're like, oh, okay, $19. Let me sell 3, $52. Okay, let me sell 4, $1,700. I had $2,000 of buying power available, so I'm still good there, and I'm going to make $70. You just sell it. And what you ended up doing was you took an option that was in trouble, in danger, and you've rolled it out further to give it more time to work, you've made back the money you lost when you closed this option, and you made a small profit. So what you've done is you've rolled it out into the future, and you've rolled it further down to give yourself more time for it to work. So that's all it means when you roll an option. That's it. It's really quite simple. The mechanics of it are quite simple. All right. If you have any questions, put them down in the comments. Thank you so much for watching, ladies and gentlemen. Nobody else is covering this kind of content on crypto, but I'm covering it here on this channel. And if you like this type of content, do me a favor and smash that like button. Hit the subscribe button, click the bell notification icon, and click all. This is Crypto Wealth. I'm out.